is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. And just checking out things right now in the markets. A lot of chat going on. We got the S&P up 3 points right now. We got the Nasdaq up 22 with the Russell up 5. We have the Dow up 17. Gold basically flat on the day. We got silver also flat, down 0.05, like a half of a 1%. We got copper right here. It is moving. It's actually down over 1% right now on the day. We have oil down 94 cents, so getting some good move in the commodities right there. Corn's down 6 points. Doesn't sound like a lot, but that's nearly a 1% move. And then on over to soybeans, and that's after the limit day it just had. On over to soybeans, it's currently down a couple points. We've got euro dollar up 59, pound dollar up 36. Aussie dollar is up 10 pips with the euro yen up 28. Pound yen is up 22 pips. The U.S. Canadian is down 44, with the U.S. yen down 21, and the U.S. franc down 55 pips on the day. And that gives you just a quick market wrap summary of where everything is at and headed right now. And, of course, we had a little bit of news, and there's not a whole lot of movement overall in the news, but we did have some news nevertheless this morning. And don't forget yesterday that China did have a bank holiday all day right there. And that continues on to today. And then tomorrow, we're going to have Switzerland, Europe, Germany, and Italy are all going to be on bank holiday tomorrow. So just keep, that means lighter volume, less FX movement, or if it is moving, it can easily be faster, choppier, because the target system that controls the FX there basically is down with the banks being down. And so all sorts of things going on. Also, the ECB rate cut that has been rumored so heavily is now all of a sudden maybe not going to be a done deal. So the secret that it's coming out may be nothing more than just purely, buy the rumor, sell the news thing. And so we'll be finding out soon, I guess. But it talked about, like going ahead and cutting its rate down to 0.5% when they meet on Thursday, when the European Council comes together. But right now, they're basically mulling it over, thinking they may not move forward with that. We also got Slovenia has been downgraded by Moody's as well. So now even Slovenia is getting the downgrade. And they moved down their bond rating from BA1 to Baa2. So with a continued negative outlook rating. And we got the Cyprus Parliament actually did decide to come together and approve a bailout. So literally the agreement came in on a 29 to 27 vote. And the people are not going to like it, but the last chapter that just came out is done. And just wait until we see the front pages of the news tomorrow. So it'll be interesting to see how that rolls itself out. But they did ratify the bailout agreement. And let's see, trying to see some other news to catch you up on the day. We had a consumer confidence came in this morning, and that, or yesterday, whatever, that announcement right there on the consumer confidence report, one of the highest numbers that we've seen in quite a while. But one of the biggest things that we're looking at, let me pull this back up. Let's see, we had, like I said, there we go, consumer confidence came in at 68.1. So an expectation of 61.4. And again, that announcement got released at 10 o'clock. We actually started to see the markets turn around on the consumer confidence report. And so it's always good to keep an eye on that news to know when something's coming out, to know, hey, you know what, I might want to be careful. And then I do see it come out. It is a positive number. I might want to tighten my stops. I might want to think twice about adding into a short for a little bit. So I still want to follow the charts. I'm not saying good report, go long. But I think that'd be unwise. We've seen, good things happen and the markets go down, and bad things happen and the markets go up. But, you want to be aware, hey, bust just came into place, and that should help you quite a bit. So, but again, consumer confidence, 10 a.m. came out better than expected, and like I said, not only more than the forecast, but actual decently reported number. Let's see here. How did that rate compare to the last numbers that have come out? Let's go ahead. I'll pull up the history. And it's not anything phenomenal. We had a 69.6 in February. We had 73.7 last November. So it's not any kind of record-breaking number, but it was just simply better than expected. And that should, usually last for about 15, 20 minutes. That did happen, and it didn't just seem to stop. The markets kept moving on that news. There wasn't really a whole lot more that I can see that just totally drove the markets continue to move higher. But overall, this morning, we woke up, and it was just, it was a ghost town, right? So markets were just flat. They were only up a couple points over the night or down a couple points, depending upon which one you're looking at. And, with that in mind, I always I get a little bit more cautious. I like to see a little bit overnight movement so I can expect some movement to come on in. Otherwise, maybe looking at a choppy day. And there we go. Had our choppy day right there. And Russia's having emerging stocks. They're moving up to monthly highs right now. And we got some of the weak economic data, though, that came out of Europe that caused oil to move down. So people were sort of wondering, why did oil move down? A lot of that's from what came out of the EU and the deficit limits and everything else that they're trying to deal with and how they're going to spend their money. And, is that a negative impact on oil? And at the same time, because people are going, well, the dollar's going down, so shouldn't oil go up? It's like, well, yeah, but, other things can happen too. So one is not always 100% correlated to the other. And let's go ahead. What other news can I bring up for you just to get you up to board? We got the yields on the U.S. Treasury decided to spike up a little bit. So their lowest yields, but they moved on up to 1.677. And a lot of that lending coming from the USD yen continue to, finding a lot of buyers and pushing the USD yen to 97.60. So, just trying to see anything else. I want to make sure that you have everything you need. But that looks like that's about it right there. Now, what about Canada? We did have some Canadian reports come out, so let's go ahead and pull up the charts on the USD CAD and see what kind of movements we had, because we did have some decent movement. It took it a while to finally decide to wake up this morning, but nevertheless, it did finally wake up. And I'll get that chart right up on the screen so you can see it and follow along with me. 1 second here. Gotta get every little setting in. And there we go. So, like I said, it took a while. So the news came out this morning, and we had several Canadian. We had the GDP, which is the big number, and came in stronger than expected. And if we go over here and look at, when the report came out, it was released at, 8:30. So at 8:30, right there, okay, we get the report, and it does nothing. 9 o'clock, then all of a sudden, it finally starts to wake up. About 10 o'clock, it starts moving. By 11 o'clock, we get the solid move. So we had a 1 deviation move by 11 o'clock, and it just, nothing was happening, and it took a little bit longer for it to go. And that easily could have been traded as well, of course, without even considering the news. Just always being aware of that news. And the GDP obviously coming in better than expected is an important number. And it did finally move. And so, looking over here at just, zooming on in on that news right there. We had the news come out at 8:30. And then, a nice solid short down there. 1 deviation, 1.5 deviations. And you could have trailed your stops along the way. And just a reminder, if you're new to the deviations, you're trying to figure out exactly how they work, just hop on in, and let me throw this on my chart. Makes it a little easier. Right there. Okay. So right here, what you'll want to do is, let's say you're over here and you're going short. So right there, you get pullback, or, you could even say, even here, whichever level. And what you're going to want to be looking at doing, and what I do is I like to get in on the breakout of the previous bar's, low. Whatever bar I want to use that on, that's how I like to get in on all my trades. I want the market going in my direction once I've decided it's going a direction. And so make it prove itself to me. And so then what I'm going to do is I'm going to actually trail at my stop. And I'm going to wait for the market. See how, it comes down but pulls back up and then comes back down. So let's say, my initial stop was up here. Or if I got it on this bar right here, I'd have my stop just right above, this most recent high right here. Market moves down. It closes below a deviation level. As soon as that happens, I'm going to move that stop down just above that bar. 5 ticks above it. Well, then this bar closes below it. I'm going to move it down here. So 5 ticks above this bar. And then this bar then subsequently closes below this level. I'm going to move it down 5 ticks above that bar. And that's really it. I mean, that's the secret sauce, Not that complicated. It's when a bar closes below a deviation, I'm going to move my stop down to just above the height of the bar that closed below it. Okay, well, we can flip that around and go the other direction. What if a bar moves above it? Okay, I do the same thing. And, here, let's go find, got to find ourselves an up move. Let's stick on the down move. Here's a good example, I think, if I can find one. I like to find all the examples I can for you. It makes it a lot easier. But, let's see here. If I can find you a solid example, one of them are just moving really, really well. Let me load in. I only have a few days in there. There we go. That'll make it faster. All right, load it on up. And let's see, it's just moving down. Maybe we'll have to hop over to the USD yen. That thing's been moving like crazy. Here we go. Give me an up move. All right, this could work for example purposes. Right here, up, down. Nope, that one doesn't do it either. So what I'm trying to find is ones where we actually move the stop twice on the same deviation level, so you can understand how to put those pieces together. Okay, this one would actually work. Here we go. We're going to zoom in right here. Just so I can make sure you do understand this concept. All right, so, we were long back here for, whatever reason we bought way back there. Market was moving up. I mean, you can see it definitely was taking off. All right, so we bought, and then we're trailing our stop up. So we're currently, like I said, taking it, to the moon type thing, right? And let's see if this works a little better. There we go. So we're going long. And then we're going to trail our stop. So we're going to trail our stop where at? Well, right here. So this bar closes above the deviation. Put our stop there. This bar closes at or below the deviation. So it allows us, if another bar before stopping us out moves back above it, we can do it again. We can trail it up now here. So I'll go over this in even more detail when we come back from the break to make sure you have down how to use this to help you trail your stops. We'll be back right after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Just going through and scanning through some of those reports, getting you up to date. But talking about, trailing the stops here. So this is one of the concepts sometimes people get lost on. And it's where when it closes above a deviation, so you just plot the deviations on your chart, and you can use any charting software you want. I like to use Ninjatrader, and you can get access to it for free. You can even get futures and forex data for free if you go to the right provider. Just let me know if you don't know who that is. I'll be glad to help you. But you just click there, download it, fill in your information, and get going. So very simple. And then inside the diagnostic members area, we give you the deviation levels. And so you can go on and you can actually pull them up right here to view the current day's deviations. And once you do that, then you'll see they're right here, and you just plot the deviations for whatever chart it is that you want to on there. And after that's done, pretty simple, we then add in a piece right here where you go, okay, so when the bar closes above this deviation, move my stop. And then if a bar closes at or below the deviation, then if it closes above it again, I can move my stop again. So this bar closes above it, so I can move my stop again. Once it usually hits it, I don't expect it to move, dramatically further. And, at least for a while. I can always take another entry, but at least I protected my profits. And so if I'm going to do that, I have to figure out, what's my method? How am I going to do it? Where am I going to get in? Where am I going to get out? Is there news coming up? Obviously that's a news bar right there. You can see that bar at 10 o'clock where it flew up and down. So if you did get into the news, where would you want to trail your stops? If, market flew down, market flew up, market pulled back. Let's say you got in on the long again. So now you got back in, like right here after the news. What would you do? Okay, so this is, good amount of time after the news. Well, now you're looking for a bar to close above. That bar closes above. You put it right there. And then the market just basically goes, and this is what you usually expect, okay? You expect it to go flat or choppy. Sometimes reverse, but definitely flat or choppy. And if it does take off, well then great. You just tighten your stop and you can let them run. But if it kicks back on you, then you were able to walk into your profits. And if it goes chop on you, well, you didn't do yourself any good by sitting in there and watching the market for the next 3 or 4 hours anyway. So my goal was to obviously, protect my profits. And as a trailing stop, I mean, some people want to set profit targets 1 to 1, 2 to 1, 3 to 1. Not bad trades at all. But I mean, at 1 to 1, I'd much rather trail my stop as take it. Now, I mean, if there's a massive, difference there, I mean, if taking it and trailing it is, just, thousands of dollars on a single contract, or, whatever. But, I have multiple stop triggers I use. That's one of them. So another one I use is Rsi Divergence. And I continue to plot it. There's different ways that you can use Rsi Divergence. But the deviation methods help a whole lot. I like to use Rsi Divergence more than anything to help me on trailing stops. So it lets me know, hey, the market could be doing a pullback, And but I'll tie all these pieces together. So if we go short over here, and the market does a pullback, boom, we get in on that breakout right there. We initially have a stop set right above the high. Okay, so if I takes above there, then it closes there, so we tighten it there. And then it closes again down here, we tighten it here, and look what happens. Market flips around. Goes the other direction. So you decide to go ahead and hop in. You see that? Boom, boom. All right, so you go and you go long. And then you're going to tighten your stop on the way back up. So it flies back up. You tighten it right there. And as you can see, the market's oscillating. It actually closes down and back. Look at this. It closes below it. And then back above it again. So I can tighten it again. Get stopped out. All right, so market does a little thing, does this little pullback, whatever, starts to go the other direction. We get an entry, we go short. Let's say we go short here. We have our stop there. And then, so we start trailing it again. So we're waiting. So now we got to close below so we can trail it. And then right here, close, above, close below again. This thing's just going all over the place. So you could put it, say 5 ticks above here, put you up at 30. All right, and then you go over, closes up, closes back down. You can't really make it, you can't trail your stop up, so you're going to have to leave it where it's at. Comes down and closes below again here. So we got 5 ticks. Closes at and then closes below again. So 5 ticks right above there. And then you get stopped out. So, but you're able to, ride this trade for a decent amount, and you had a very methodical, simple way to trail your stops. And it gave you room to let your profits run. And every once in a while, they will just take off. And but you need the market, you need the chart to tell you when to get out. And so you want to have a very objective method. And I prefer to use that over just about anything right there. The deviations are awesome. The other method I like to use is Rsi Divergence. And I'll show you a little bit more about that when we get back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And what we're going into right now is just looking at, RSI divergence. How does that work? Depending upon how you're doing it and what you're doing and everything else. And what are some, ways that you could take advantage of RSI divergence to help you in managing your trailing stops. I don't like to fade RSI divergence, meaning I don't like to go short because I have divergence. And, the market's going up and it's there. Because the market can diverge for a long time. Okay? And so... right here what I would do is I'd look at every time, so if I get an entry, and, looking at my charts and the way that I trade, I got an entry right around 11:30. So right over here, I got an entry. Okay, so we, right on this bar, right as this bar broke out over here. And so I'm going long, and we'll zoom in on this. And then, I have a stop. Let's see, my stop on that entry, where was it at? It was right around 28, 66.50 minus 5 ticks, so 28, 65.25. All right. So then I put a stop right down here, 28, 65.25 on this trade. Okay. So that's where I can get the thing to draw it. 28, 65.25. Okay, so that's my initial stop. Okay, that's where, I'm going to get out. I'm going to sell to exit if it hits this level. Now, I had the deviation method. That's one of the methods that I have. Another method that I like to use along with it is just simple RSI divergence. Okay? So let's look at the RSI divergence method right now. And I'll just show you sort of how that works. And, how to put those pieces together. And it's a lot simpler than you might think it is. So right here, what we're going to do is we're just going to take a couple lines and go, okay, when I have a line right here, so I go in, and the market pulls back and then makes a new high. Okay, so like from here, market made a new high. Small, but it made it. And I can even zoom in on my chart to make it easier to see what I'm talking about. Here we go. Right there. Alright, so market makes a new high. Then, and this is the way I like to do it, then what I'll do is I'll take the same point and I'll draw it just to that same bar. There's no divergence. See, they're both angling in the same direction. So, no divergence, next. Alright? I'm done. I don't even worry about it after that. Now, market dips down and then makes a new high. Now what do? We'll check this out. We're going to go over here. We're going to take this. Go, okay, well, where did it make that new high? So right there. Now, let's go ahead and do the same thing down here. Here we go. And what was the price at that time? Okay, right there. Now that is RSI divergence. See how the angle of the slope is up? The angle of the slope is down. Okay? So at that point, now, I can take my stop that I had over here. I can move it up right below that bar. So 5 ticks below it. And then I literally just keep, going, okay, well, did it continue to do this? So let's see, let's move it down a little bit higher. And I can go, well, from here to here, and I can look at that. So RSI 72.14, RSI 71.19. Okay, so that is not a lower number, it's a higher number, therefore, it's market's made a new high, it's going up. Okay, done with that one. Alright, so now let's keep moving that stop on up. Do we get any more chances? Sometimes you do, sometimes you don't. Okay? So on this one right here, didn't really get another chance to move it up, but what did I have? Well, I had my deviation stops, right? So now, this bar closes above, and I can put my stop right here. Now, if the market does make a new high, so if it actually breaks up above 250, I probably will have another RSI divergence, and I'll probably be able to move it up again. And so that gives you just a couple of the stop methods. Like I said, I like to use several methods, but that gives you a couple of them. Another method is when you get this dip, this low, this pivot low right here. So I'll go in, and I'll trail my stop on that. So, I had a stop down here, and then I moved that stop here, then I moved it again right here. So, stop loss, what I call my power line right there, power line, okay? And then right here I got my RSI divergence, and then right here I got my deviation, 10-minute stop deviation. So that shows you just, like I said, a few of the methods that I use. I have about 8 different things I look for, and I call them triggering events. So, whenever there's triggering events happen, then that'll basically give me what I need to be able to trail my stops. And again, this is important, give room to let my profits run. Now, what may happen is you may get in and maybe you get stopped out. So maybe like right here, this bar closes above. Then, you really, right here. So we have what's the low on this one? 28.71.50. So 28.61.50, 28.61.25. I'm going to go, let's see, 28.71.50. So 28.69, 28.70.50, 28.70.25. So right there, okay? So I'm going to have to look at that right there and go, okay, well, one, am I going to move my stop up to this? And why would I maybe not do that? Maybe I would, maybe I wouldn't. Why would I if I didn't? Okay? I need to determine what my entry price was. So my entry price over here is 28.69, 28.69.50. So if I want to get out right at break even, I could do that right there. Basically, that's just like a reset trade. So this is actually where I went long. Right there. And that's pretty much where the exact same stop is at. It was right at the same point I got in. So if that happened right there, in, out of trade, but then I get another entry on the pullback and the breakout right here. So now my stop, now 5 ticks below the low here like I had it here before. Moving on up. And so I got the Rsi Divergence, okay. And of course now check this out, it's also closed above. So I can add one more in there, because this is a new entry, right? So closed above, so I actually can tighten my stop a little bit more on the deviation line, and then tighten it again on the divergence, and then tighten it again on the next deviation line. So just starting to put all these pieces together to allow me to have a very systematic method of how I trail my stops. And some people go, well, I mean, you got stopped out and got right back in. Yeah, but you know what? Who cares? I mean, that was a break-even trade, and what are you talking, a couple points? So that's not that much. And I would rather get out of this trade and let the thing go against me. Okay, one of the sayings one of my mentors taught me, which is one of my favorite sayings in trading, is I would always wish I have something I don't as have something I wish I didn't. Okay? And it's a very wise saying. Again, it's I'd always wish I have something I don't as have something I wish I didn't. And by putting those pieces together, then you'd start to go, you know what, I'd rather get out at break even and take the next entry as hold on and hope that it works out for me. So that gives you a quick lesson on that. Now we can apply this, of course, to multiple markets. I mean, we can hop over on the S&P and look at that. Let's see, here we go. And so you could apply this exact same Rsi Divergence Method, and check this out right here. So we got this level, comes up, makes a new high. So it basically happened at the same time frame as it was over there on the NASDAQ. Right there. And then what do we got? Well, here we go. This one's going to keep going for us. So right here. So you start having RSI fans right here, right? So these things keep going. Right there. So I'm going to tighten it again. So what am I doing? Each time, and by the way, also, you know, that's just, what is that right there? Okay, that's just the price alert. And then right here, so tightening again. And then do I have another one? Well, let's see. Let's track it right there to right here. Yeah. So I got another one. So I got to tighten it again. Okay. And then do I have another one? Well, let's check it out. We got a new high, right? So new high way up there. Yep. So what I'm doing is I got a new high right up here. And then I got another new high. Well, does that one also give me a divergence? Let's see. So we go from the same point, pull it all the way back. So yeah, so we got 1, 2, 3, 4 divergences. And really, I mean, this one's the same low, so I just, you know, tighten stops, same as on this one as it is on this one. And haven't hit a deviation level yet, right? So because we went down earlier, little pullback on the consumer confidence report down here, right off, by the set, right off the 0.5 deviation. And so perfect point right there. And then now the market's just oscillating. So we have 5 ticks below this point right here. So we can see where's that stop at right now. And this is a pretty cool method. Like I said, you can apply it to a lot of things. We can go, okay, what's the stop on this? So we got a low of 1590.75. That put us a stop at 1590.89.50. So 1589.50. So right about down here. So we got our stop move down, and this one, of course, is, you know, like right here. So this one's even lower. It's down here. So again, trying to give it room to run. You could always do tighter stop, tighter ticks, but if you do it, then, you know, you really risk giving that up. And that looks huge, but of course I'm zoomed way in on the chart. It's not as big as it looks, and the S&P does tick in quarters. So now on Nadex it ticks in dimes, which I love, but it ticks in quarters right here. And I can go over, and I mean, like I said, I can apply this on anything. I can pull up the spiders. So same market, all right? Works the same way. So go on in. I mean, look at my RSIs are all lining up the exact same way. And so I could just as easily, even if I trade, you know, ETFs. See that? Got this one, and got that one, and Got that one right there. So, have the same thing going on. And yeah, I guess you could say it's a little bit tighter. So if you're looking at the tick size, obviously being smaller. And, so you may want to put in more, if you're, trading stocks, you might want to use more than 5 cents. I mean, because a tick isn't a cent, same thing, minimum increment move. But, maybe you use 10 cents or whatever. If you use 5 cents, what would that put it at? You'd have a low there of 59.55, so that would put you at 59.50. What did this? Gotcha. Ticked out right there. You may want to use, like I said, like 10 ticks or whatever if you're using, for trading some sort of penny instrument, based instrument, tick instrument. So, right down here, just to give it room to, let it oscillate, let it run a little bit. And as soon as this thing, breaks this high up here, if it does, then we're going to be able to go in and apply it. And you can apply this to the deviations. How would you apply the deviations that we post on our chart, on our website, to the S&P E-minis? Well, I mean, just look at them. We got S&P, just move your decimal over, okay? So, 159.25, and then you're basically going to go over here to 159.80. So once we hit 159.80, throw your line on right there. And again, we got 1598.0, so you just, like I said, just add a decimal in and apply it to the underlying market. And like this is quoting at 159.61. If we go over to the S&P, now there'll be obviously a slight difference in price, but it's going to be quoting at 1591.50. I mean, we're not talking, just massive differences. And you can even see them when you pull them up on, like I say, a TOS chart. Whenever I'm teaching people like the difference in how things work. But we go over here. Let's do like /ES, and then we'll do spiders. And we'll see that there is, a lot of similarity right there. And if you want to see how big that similarity is, we do /ES minus SPY times 10. And then you can basically see the, the offset. And you also could just, manually do the calculation. And go, okay, so 159.62 times 10, 1596.2. And then you go over here. Okay, well, what is this one? Well, this one's 1591.5. Okay. What's the difference between the two? Pull this up. And it's going to, like, you can see how that remains, like, relatively consistent right there. So 1596.2 minus 1591.5, you got 4.7. So you're going to see it fluctuate right around that area. So if you know there's a 4.7 difference, okay, meaning it's basically overpriced by 4.7 because of dividends being built in and everything else. So it's overpriced by $4.70. So now we can go in and go, okay, well, let's take this number now. Let's divide it by 10. Let's take this number, divide it by 10, then let's subtract 0.47, and now we're getting right at the exact same price as the S&P, and now we can go in and go, okay, well, if that's what I'm doing right there, then now I can actually go in and, subtract 47 cents or so from my deviation levels. So if my deviation level is 1598, I'll show you how to do that and apply that to an S&P chart when we get back from this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So if you're trading the spiders right here, they just broke above this high level, and we're waiting right now for this 5-minute bar to close here in the next 60 seconds or so. So as long as it doesn't break too high, then we're going to have a divergence. And if we do, then my stop is ready. So I got it over here from the last one, right? So to be able to move on up, and like I said, anywhere between 5 and 10 ticks, depending upon how tight you want it to be. I would look at, by the way, if you're doing this, go back and draw this for the last several weeks on your charts, and then pull it on up and test it and see, what works best as a stop. So what gives you, you're not trying to capture it all. I know we all want to capture it all. But what you're trying to do is you're trying to give yourself the chance to let profits really run without easily being stopped out. And yes, that means you are going to give up some of that 10, 15 ticks here and there, whatever. But if you can consistently grab that over and over again, then that's, you want to get those moves. You want to tighten those stops. If you get too tight, you're going to get kicked out over and over again. So it looks like right here, unless this bar makes a new high, may not be tightening that stop again, but we'll have that right there. And we're basically, as soon as it stops making new highs, okay? Now, equal high would be like the same bar, okay? So if you have two bars that make the same high, I just count them as one bar. as far for this method that we're talking about right here on the RSI divergence technique to help you tighten your stop. So let's say this bar closed right now, then we wouldn't count it. Now if it makes another high, I am going to draw another line from my last high bar here, okay? And I'm going to take it on over to this line. And let's say it, if it ends right here, and by the way, I will tighten it again, even if it's the same high. Okay, so let's say it did close right there, because I'm not going to extend this thing on out. Then that allows me to tighten a little bit further. I mean, that's another, ticker, 5 cents or whatever my favor. So 63. Now I could move it up to, let's say 53. If this bar were to close, right now. The show's about to be over here, so I can't keep following the trade with you. But hopefully you're getting the idea on the basics of this RSI divergence technique. And it's really all about that pullback. So that's one of the diagnostic trading methods I use. And notice, I do not use it to tell me to go short. So you can have divergence and the thing can keep going up all day long. You can have overbought and it can stay overbought for months. All right? But divergence does mean, hey, start looking out for the market to possibly pull back. And you start getting a double divergence, a triple divergence, a quadruple divergence. And what I mean by that is you get these peak to valleys over and over and over again. Now you better start watching out. Okay? So start actually looking for a turnaround at that point. So that's when I'm going to get really cautious, give me a good, heads up on the market, what's happening in the market. And but as for now, what I'm going to use it for is, hey, be alert, be aware, market may pull back, tighten stop, but give room for profits to run. And then, like I said, do that simple technique. Like I said, if you're going over here, we subtract the, 47 cents from the deviation level. So if we had a deviation level of 1602, actually 1598. So we actually passed that a while back here. So we had that first deviation level down here, 1598. And, or 15, yeah, there we go. And then you just basically put that difference in. So 1598 minus 47, so it puts you at 1597 point, we'll just say 50 to make it easy for the moment. And right up here. And then we got that next level, 1602.25. So you take 47 cents off, 160.22, puts you right at about 159.75. And that's where you'd have your deviation level right about there if you're equalizing the two, the S&P versus the spiders, to use our deviation levels. So we'll be coming out with stock and ETF levels very soon. I hope you all have a great day, have a safe day, and I'll see you tomorrow.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.